Get ready, eBay sellers. Tax laws have changed. Welcome to the top-rated seller webinar for today, January 18th, 2012. We are so glad you're here. We do have a question board for you to type your questions in as we go along. We will try to get to as many of those as we can at the end of the broadcast. We try to stick right to about an hour as we know how busy you are. Our presenters today, we are blessed to have three fantastic presenters. Diane Kennedy, CPA, from Tax Aid USA, Ryan Thompson from Outright, and Laura Messerschmitt, also from Outright. We are so blessed to have them here presenting. We would like to remind you that these webinars are completely free, no obligation, and that's all in gratitude and thanks to our sponsors. And our sponsors include eBay Radio. Every Tuesday and Thursday, you get help and advice for all your eBay selling needs. You can find eBay Radio now at ebayradio.com. PageMage, the makers of the new Billboards application to easily create a unique eBay template or use as a custom banner with your existing templates to make your listings stand out and sell more. And it's free. Brand your listings, cross-sell hot items, and advertise special offers, communicate policies, and more. Go to pagemage.com to learn more. Our other sponsors include stamps.com, postage from your PC. Never go to the post office again at stamps.com. Terapeak, eBay sellers with Terapeak make more money than you. Check it out at terapeak.com. And of course, Outright. Put your accounting on autopilot with outright.com. Our next webinar has just been scheduled. We are excited to announce that we have scheduled a webinar for February 22nd, 2012, not 2011. And this webinar will be on the best practices for best match success. This will be given by the head of eBay's Search Science team, Julie. You can find out more about all of our webinars at topratedsellerwebinars.com. That is our blog, and you will also find the sign-up link for the new webinar and the sign-up link for our newsletter right there on the blog. Please be sure to check out topratedsellerwebinars.com. Little bit of housekeeping for those of you new to a GoToWebinar format. Is this webinar being recorded? Why, yes it is. The recording will be made available on our YouTube channel, and a link to the recording will be in your newsletter. Please make sure you're signed up for the newsletter at topratedsellerwebinars.com. Will you distribute the presentation slides? Yes, we will. We will add the slides as a PDF onto our topratedsellerwebinars.com blog site. If you're having audio problems on the phone, the best advice we have for you is try hanging up and calling back in. If you're on the computer with technical issues and you can't hear, we highly recommend picking up the phone and dialing in. And with all of the housekeeping out of the way, I'll turn it over to Ryan. Today's first presenter, Ryan Thompson of Outright. Hi, Ryan. Hey, Ryan, are you there? Okay. Do we have an issue? Ryan?
Hi, Kat, can you hear me?
I sure can hear you, Laura. How you doing?
Why don't I go ahead and take it if Ryan's unable to speak at the moment?
That's a fantastic idea. Are you ready to take over and tell us all about this new 1099 and more?
Sure, I can go ahead. So first of all, a little bit about who we are. So we have Diane Kennedy with us, and she is a CPA, and she is really well known actually on her U.S. tax aid site. So highly recommend you check that out. When she starts speaking, she can tell you a little bit more about that. But she is very, very qualified to talk about taxes and about loopholes and sort of different things you can do to reduce your taxes. Ryan and I both work at Outright, which is a small business accounting software. So we are both not CPAs, but we both have a lot of experience with taxes. And we've been working directly with PayPal on the 1099K issue. And so we're able to answer a lot of different questions about 1099Ks in specific. Go ahead and
awesome.
The slide.
There we go.
So the agenda, first we're going to talk about annual taxes. Just give you a quick overview so that everybody's on the same page about what are annual taxes and when are they due. Then we'll talk a lot about what's changing for eBay sellers. And so I'll talk about that and talk about 1099Ks. Then we'll pass it off to Diane, and she's going to talk about how you can stay compliant. She sees a lot of eBay sellers and sees common mistakes that they make, and so she'll spend some time talking about that. And then probably for a lot of you, the most important part will be talking about deductions and what are common deductions that we see that eBay sellers take, and are you saving as much as you could on taxes? So first, to start on annual taxes. Go ahead and advance the slide. Real quick, quick disclaimer before we do that, which is that make sure that there's a lot of legal jargon. Our lawyers made it put it up there, but go ahead and make sure that if you are going to take any of this advice, make sure to speak to a tax attorney about your specific situation, because the advice we're going to be giving is general advice for eBay sellers, but definitely take a look at what your specific situation is. Okay, so annual income taxes, those are due on April 17th. They're always usually on April 15th, but this year April 15th is on a Sunday, and April 16th is a holiday in Washington, D.C. So that means that everyone is a little bit lucky and gets a couple extra days to do their taxes. And so they are due on April 17th. Now you can actually file for an extension, and if you do that, then you would actually have to submit your tax return on 10/15. So that doesn't mean that you can delay paying your taxes. It only means that you can delay filing your taxes, unfortunately. So go ahead and flip the slide. Yep. So then that often comes up as, when do you pay your income tax? So if you have a full-time job, you know that, and you're not, eBay is on your side and you've got a full-time job, you know that you're getting taxes withheld from your paycheck every week. The problem with if you are a full-time eBay seller, or if you're selling using eBay as a side business, those withholding taxes aren't being taken from your paycheck because you are your own employer. And so the government actually requires that you pay estimated taxes, which means that as you go, every quarter, you're supposed to be paying a fourth of your annual income tax throughout the year, so that you're paying as you go, just as if you had this as a full-time job for an employer. And so the dates this year for those payments are January 17th, which was yesterday, and that means that quarter 4 taxes were due January 17th, and then April 17th, June 15th, and June 17th. And basically all this is meaning is whatever you owe for your annual taxes, you're supposed to pay a fourth of it quarterly. Okay, so now we'll talk a little bit about what is changing for eBay sellers this year. And there's a pretty major change this year that is the first time ever, and it's probably the biggest change we've had in a good decade. So it's important for people to be aware of it. And that is the 1099-K. If you flip, go ahead and flip the slide. Yep. So the 1099-K is a form that PayPal is going to send you if you're an eBay seller. If you sell offline or you sell at other places, you may also get them from other places. Basically, third-party merchants, such as PayPal, are required to send this form. And this form is going to be sent 1 copy to you and 1 copy to the Internal Revenue Service. So the IRS will get a copy of this form. It's expected that 53 million of these forms are going to be sent out this year, which is pretty incredible considering that this is the first year that this form is showing up. It's going to be the 10th largest tax form of all. Pretty staggering given that it's the first year that this form exists. If you go ahead and click, so who will receive them? PayPal is going to send them on January 31st. There are some people that will get them on the 23rd, but the vast majority are going to get them starting the 31st. And you're going to get one if you had 20,000 or more in sales through PayPal, and you had to have sold 200 items or transactions. So again, it is an and. You have to meet both of those limits in order to receive the 1099-K. And all sales through PayPal are going to count towards the limit. So it's sales of goods and of services. So if you're selling services in addition to your eBay business and you've hit those limits, you would get a 1099-K. A common question we get is, well, what if I have 2 PayPal accounts? What happens? And the answer is the 1099-K is sent based on your tax identification number. And so if you have 2 PayPal accounts and together combine those PayPal accounts equal these limits, you're going to get one for each of your PayPal accounts. So you'd actually get 2, not 1. And as this is a note, for some of you that also sell on Amazon in addition to eBay, you might also get one from Amazon. You would have to meet the limits on Amazon to get one from Amazon. So if the Amazon and PayPal aren't combining or anything like that, it's just if you sell on Amazon and you meet 20,000 in sales and 200 items on Amazon, you will get one from them as well. So the next question is, what do you do with your 1099K? And so at Outright, we've created a little acronym for you to think about what you're going to do with it, and we call it RED-IT. So that's R-E-D-D, just a little acronym for you to remember. We want you to reconcile it. We want you to think about your expenses, your deductions, and we want you to double check it. An important thing to note is that the 1099K is reporting your income. So if you look at your Schedule C here on the right, you'll see Part 1 is income, and it's reporting basically that number. But as a reminder, you don't pay taxes on your income. You pay taxes on your profits. So that's income minus expenses and deductions. And so your job as the person filing the taxes, now that the IRS knows your income, it's now important for you to show your expenses and deductions so that you're only paying the taxes on what you really owe, which is on your profits. So first, talking about reconciling. This is a form that we've got within Outright. It's launching on Monday. So for Outright customers, you can go reconcile your 1099K by coming in here on the Taxes tab. You'll see a 4th tab next to Annual, Quarterly, Sales, and then 1099K taxes. For those of you who are not Outright customers, PayPal is going to provide a CSV file of all your transactions. Or alternatively, it takes about 5 minutes to sign up for Outright. So you could sign up for the free account on Outright, spend 5 minutes getting your PayPal information in there, and take a look here. But the goal of this step of reconciling is really to look at what are the numbers that are included on that 1099K and understanding that. Because we believe that, we've been talking to PayPal, and we believe that about 99% or more of these forms are going to be correct. But the number is going to be higher than you're expecting. So when you see that revenue number, you're probably going to be surprised because it is a gross revenue number. And so it's really important to understand, well, what's in those? And so here, if you go in and you can actually click in on each of these numbers and sort of get a sense of what's included. Example would be, let's say somebody did a fraudulent transaction with you and they gave a fraudulent credit card and they bought something from you. Even if PayPal refunded that or took action on that, the fraudulent charge is going to show up in your 1099K numbers. Again, because it's showing gross revenue. And so your job is going to be to show that, hey, there was an expense I had here because I didn't actually receive this money. Same with refunds and returns. Those will be in the 1099K. And you'll have to show the expenses associated with those, which means that if it was refunded, you didn't actually get that money. So different things like that, that if you understand what's included in these numbers and understand that it really is the gross revenue number, the full everything you sold, it'll really help you when you go to the next step. And the next step is expense. So expenses, so keeping track of your expenses. And here we've listed out a few of them that we think are really important. So for example, your eBay fees, those aren't taken out of your 1099K, but you need to show them as expenses. Same with any shipping costs you had, PayPal fees and refunds. Supplies, cost of goods sold and supplies are both important. If there were any unusable product that you had to throw away, that would be an expense, so make sure you're capturing that. Same with mileage. So anytime you're going to the post office to drop off packages, you should be reporting that mileage and then taking that as an expense. And Diane will talk a little bit more about that. And then finally, taxes is a really important one. So if you collected sales tax from many of your customers, that will actually show up in your 1099K as revenue. And so you need to actually show how much you collected in sales tax because that is not taxable income. It's just money that you collected that you're sending off to the state to pay the sales tax. So make sure that you know how much you paid in sales tax so you can expense that on your taxes. Next, deductions. You want to make sure that you're taking all of the deductions that you legally can. And Diane is going to talk at length about different deductions that she sees that eBay sellers take. So I won't cover this too much, but it is an important part of dealing with your 1099K is to make sure that you've got all the deductions that you can. Again, the goal is to to only pay the tax on the profit, not on the income that's on your 1099-K. So finally, the second D on Reddit is to double check. And what we're saying here is you want to double check that the amount on your Schedule C specific line, which is line 1D, matches or exceeds your 1099-K reported sales. So I would suggest for the people listening, just write that down, and then when you do your taxes, just remember to go and check that number. And basically what we're telling you to do is we want the total income that you're reporting on your Schedule C, which is this tax form that you fill out with your eBay business, that matches or is more than what's on your 1099-K. Because it's a big red flag to the IRS if it's less. Because basically the 1099-K is telling the IRS this is how much she or he made. But then on your tax return, if you're reporting less than that, then obviously that's a red flag to the IRS. So you want to make sure that you check that before you submit your return. If you can see on the left here on the Schedule C, line 1A, it says merchant and third-party payments. That's actually where you're supposed to report your exact 1099-K amount. So for 2011, you're not doing that. You're basically putting that amount in lines B and C. But in future years, you actually will exactly have to put that amount in that box. So literally, whatever comes on your 1099-K has to be added into that box, which means that your revenues will automatically be more than, will be the same or more than what is reported on that 1099-K. But for this year, you just have to make sure that line 1D matches what's on that 1099-K. Okay, so just as a reminder, when you get your 1099-K, for those of you making over $20,000 in sales and 200 transactions, remember to reconcile it, make sure that you know what's in there and understand it. Expenses, make sure that you capture all of your expenses and report that on your Schedule C so that you pay on the income, or sorry, on the profit, not on the income. Make sure that you've taken all the deductions that you're eligible for. And finally, double check line 1D on your Schedule C needs to be the same or higher than what was reported on your 1099-K. Okay, now I'll pass it off to Diane.
Hey, thank you, Laura. That was great. And it's awesome how you covered what's going on with that Form 1099-K. That's been giving us fits for a year because we weren't sure how accurate they're going to be and how you're going to reconcile it. So
yeah, and we believe, like I said, yeah, we've talked at length with PayPal about this, and we believe that they are going to be quite accurate. It's just a matter that so much is included in that gross revenue number that sellers really need to have an understanding of what expenses to take off of that.
Yeah, and for some people that are selling, they might additionally have other ways of taking money, like maybe they're using Authorize.net through a website, or they've got Visa and MasterCard coming in a different way. So it's very possible somebody's going to end up with 2 or more 1099-Ks. And at least for this year, just make sure that your total is going to be more than what's getting reported, or else you probably got a red flag with the IRS. But that's kind of the tough stuff to talk about. Now I'm going to talk about the fun things, which is how can you pay less tax, and that is looking for the deductions. But I want to start with a couple of things that sometimes eBay sellers can get wrong. So these are probably the 2 biggest errors that we see. And on the next slide, you see the big one that gets people confused, and it has to do with inventory. I think what happens is people think if I write a check or I pay for something with a credit card, it's an expense. I'm a cash basis taxpayer. Therefore, everything that I spend is a write-off. And that's true except when it comes to inventory. Because even if you buy a lot of inventory, maybe at year end you're thinking, hey, I'm going to buy a bunch of inventory, then I won't have to pay any tax. But the problem is inventory is actually considered an asset. It's not an expense. So inventory itself could be something that you're buying that you're going to later resell, or it could be things that are going into making that item you resell. Maybe you buy stuff and then you make it fancy or you fix it up. Well, all of the pieces that go into making that are considered inventory. So as you're building that, those things are just an asset. Later then, when you sell it, that's when it becomes an expense. So the expense of that inventory item goes against the income. Now, practically, when we're trying to put this all into practice, how does that work for somebody who's an eBay seller or small home-based business? it's probably going to be pretty hard to track sale by sale and match it up. So on the next slide, we've got a couple of tips here for the eBay seller. One is to know what your end-of-year inventory is. So we're now into January, and if you didn't take account of what you've got, well, go do it today. Get it done as soon as possible, because you're going to need to know what the value is of your your year-end inventory. That's because if you spent, like in the example Laura was saying, maybe $36,000 in product, but you've got $5,000 in inventory left at the year, then we need to subtract that from your product cost. So you really only have, using that example of $5,000 inventory, $36,000 of product purchased, there's really only $31,000 then available. That's an expense. The rest of it is that asset that carries over into next year. So thing to remember is you can't expense an inventory until you either sell it or you scrap it, and by scrap it, it means this is worthless, I'm just writing it off, or you donate it. When any of those things happen, you then have that deduction. Now, people might think, oh my gosh, inventory, this is something the big companies do, but it really isn't that scary. You know, just at the minimum, at the end of the year, as close to it as you can, just take account of what you've got. It actually helps you with your business as well, because you need to know what the value is of things you're selling them for. If you sell things for way less than you're paying, you're not going to be in business much longer. So doing this really helps you with business. The next big thing that gets people confused is paying yourself a salary. Now, we're assuming that most everybody's going to be filing a tax return as a Schedule C, that's part of your Form 1040, or as a sole proprietorship. It means the same thing. Sole proprietorship equals Schedule C. So do I have to write myself a paycheck? Do I pay myself a salary? This is great. The answer is no. I love when I have a definitive answer, because the bottom line is if you're a sole proprietorship and you file a Schedule C, you do not pay yourself a salary, period. Yay, life is easier. So now if you move into a corporation or something, then we need to talk about that. But for the simple Schedule C sole proprietorship, you don't need to worry about it. So, okay, ran through a couple of things fast. Now let's get into, this is the fun part. Deductions. Now remember, we want to look for all the deductions that we can legally take. Legally, because we certainly don't want to get in trouble with the state or with the IRS, but at the same point we want to take all those deductions we can, because as a business, your eBay business can actually save you taxes. I mean, it's cool. It's that you can think about, you're putting money in your pocket and you end up paying less tax doing it. That's because a lot of things that maybe you're spending money for already might be deductible now. So what's deductible? Well, it could be just about anything. Here's some pictures. Now, the answer is, you know, people will ask me, is this deductible? And my answer always is, it depends. In order to have a deduction, it needs to be something that's regularly, you normally do it with your business. It's ordinary and it's normal for bringing in income. So as an example, in the top left, we've got a family sitting down to eat. Now, is a meal deductible? Well, a meal would be deductible if it's something that's helping your business. So if you're taking your accountant, and by the way, I'm an accountant, so if you take me out to lunch and we talk about accounting and tax things, and you pick up the check, you've got a deduction. Now, how about paying your family? Well, or feeding your family. In this case, maybe this is a break they're taking from shipping products. Now, if you're having a meal for the benefit of the employer, and it's at the employer's workplace, which is your home office, and you just, hey, we're going to stop and have something to eat quickly, and then you get right back to working, you've got a deduction. There's a couple in here that you might consider kind of lifestyle, you know, hair and makeup. Well, if you're doing a video to help promote some of your products, the cost of getting your hair and makeup and manicure, pedicure if you're showing your feet, those could all be deductible. I have a friend of mine who loves shoes, and so she was asking, how can I take a write-off for my pedicure? And I said, you need to become your own shoe model. So sure enough, she's getting pedicure, showing off her cute little sandals for sale in the shops. And guess what? The pedicure is a deduction because it's helping the business.
Oh, Diane, I
Yeah.
can't believe you said that. I sell shoes, and I'm just so excited. I can't stand it.
Okay, there you go. Go get the pedicure. It's all right. Well, you have to have open-toed shoes. So
I can fix that. Thank you.
Yeah, there you go. Some other things, travel. Well, if you're traveling and it's helping your business, you're finding more resources, having more distribution channels or finding more places to buy stuff, then travel's a write-off if it's for the business. In the right-hand corner, or kind of in the middle on the right-hand side, you see a couple of, I'd say, teenage boys helping with shipping. Anytime you can get your kids to help, especially a teenager, first of all, you got to get a medal, and then second, you've got a write-off, because the money that you pay them for work that they legitimately do in the business is a write-off for you. Now, it's income for them, but most of them don't have any other income, and so they don't pay any tax. So you've just created a tax break for you as well. There's a home office at the bottom right-hand side. Home office can be something that's a little tricky, and we're going to actually go in a little bit more detail in a second on what you want to do in order to make sure you've got that deduction. Also showing a car there. I've got to say that's probably the thing I get the most questions about. How do I write off my car or part of my car? And in just a few minutes, we're going to go through some specific tips on how you get the write-off. Other things here, paying for school, education. Well, if you're sending your kids to school and there's a specific class that they're taking that would help them with business, so they're going on to college and they're getting a degree in business, and part of what they're studying is marketing. Well, if they're already working in your business and they're taking a class in marketing, then it's a deduction. That's because it's going to help you have a better business. Now, just as an example, I'm a CPA. If I decide to go to law school, I have no idea why I would want to do that, but let's say I do. If I decide I want to be a lawyer, again, I would first go to a psychologist. I'm sorry, is there anybody who's a lawyer on the call? I apologize. But, if I'm going to learn a new profession, then I don't get a deduction. But again, as a CPA, I could very well take a class in contract law. That would be really handy to know with what I do. Now, in that case, that particular class would be a deduction. So the same is true for you. If you've got a business selling shoes and you decide, I'm going to take a class in, I don't know, leather making, or something that's kind of fun and also helping you learn a little bit about what goes into all of this, you could very well have a deduction. So just some ideas there to get you started. What I do with most of my clients, though, is I have them sit down and list out what do they normally spend money on. So maybe go back through your credit card statement, your checking account for the last 3 months. And then with every one of the expenses, ask yourself, how could this be a business deduction? Now, not everything you have is going to be a deduction. In fact, that's where people get into trouble by trying to write everything off. But the fact is that there's probably a lot of things right now you're spending money on that could be deductions. Your cell phone, when you first bought it, my guess is you then contributed it to the company's using it, and you never got paid back for it. That's the kind of thing that you might do. Your computer, the desk that you're working off of, your office chair, maybe pictures in your wall. I'm right now sitting in my home office, and I've got pictures all around me. Those are write-offs because they're in my home office. So a lot of things you can look at. The bottom line on this next slide, the more you have deductions, the less tax you're going to pay. You're going to have more exemptions, and that means you've got more money for your business. So the more deductions, more money. Okay, next one, I've got a little sneak preview there of the home office. Okay, this is one that kind of gives people a little bit of trouble, so let's go over that real quickly. In order to have a legitimate home office, you need to have a space that's used regularly and exclusively for the business. And by exclusive, they mean that it's a spot that's not a corner of the dining room table, but it's a separate room. I'm right now in a separate room. It could be the basement, it could be an attic, it could be a spare bedroom. Now, as an eBay seller, you've got actually another little added twist and added benefit. You also get to take a deduction for the space that your inventory takes up. And in this particular case, inventory doesn't need to be exclusively used for business. So you might have your business and have a spare bedroom where you're running your home office. Great, you've got the deduction there. And you've got half the garage taken up with things that you're storing that you're going to later sell. Well, you get to then take a deduction even though you're also parking your car in there. So it doesn't have to be exclusive when it comes to inventory, but it does for the home office. Once you figure out the amount of the home office, where that is, measure the square footage, so you've got the business amount, then your total square footage of your house, and just as an example, let's say your home office is 200 square feet and your total house is 2,000. You've now got 10% of business use, 200 divided by 2,000. So 10% of all of your home-related costs are now a deduction against your other income, your eBay income. So that be rent you're paying or your mortgage interest, property tax, utilities, janitorial. I mean, you get a sense there's a lot you can write off. Now, one little trick on the home office. If you're working as a sole proprietorship, which I think most of you are, if the home office pushes you into a loss, the home office can't give you additional loss. So that deduction then is suspended for a future year. Now, I just used some accounting jargon in there. Bottom line is, if you've got a home office deduction, you might not get a benefit this year, but report it anyway. That's because it's going to roll forward until a year when you can use it, and it just continues to roll forward. It's a mistake I see people make where they think, hey, you know, I don't need any more deductions, I'm just going to stop looking. And then 3 years they suddenly have a huge windfall and they're looking for deductions and it's too late. But if you report it, and even if you don't take it now, it can roll forward. And the term we use as accountants is it's suspended until a future year. Final tip on this with the home office, take a picture and keep it. I can't tell you how valuable that is, because the fact is a lot of us move. 2 years from now, you might be in a completely new house and the IRS, you know, heaven forbid, but maybe they audit you. And they're going to say, prove you've got a home office. You don't even live in the house anymore. But if you can show them a picture, that's worth 1,000 words or maybe $1,000, depending on how much of a write-off you've got. So let's go on to the next one, retirement plan. And another thing that kind of gets people confused, should I have a retirement plan? When do I do it? How does that work? Well, there's a number of different kinds of plans you can get, and the rules can be they're all different. One of them, the individual 401k, it's also known as a solo 401k. I got to say, I love those plans because you can put so much money away. You can put up to $49,000 away in a pension plan. Deduction for you, it goes into this plan, and then you can use that money to invest. And it's the thing that's cool is it's self-directable, which means you get to pick. So if you're looking at real estate right now and you're thinking, wow, real estate prices are really down, wish I had some money. Well, if it's in a solo 401k, you've got money you can invest in real estate. It can also be, retirement plans often are kind of our last-ditch tax savings measure, because sometimes people might end up with income more than they expected. And, oh, what are we going to do now? Well, the retirement plan, in most cases, you have until you file your return to get it funded. So, I mean, I have to tell you, you know, Laura was absolutely dead on with those dates on when we have to file, April 17th. You can also take a 6-month extension, which takes you to October 17th. And the cool thing is that you have until then, if you file that extension, to fund your pension plan. So I have clients every year that are filing extensions, and they're doing it because they've got to fund the pension plan because they need the write-off, and they need a few extra months to get it funded. So this is a great kind of little marker you get from the IRS. In a lot of ways, the business owners, and that includes small business, home-based businesses like eBay sellers, we get all the breaks. You know, there's some cool ones there. Now, either one of these, we also talk about a SEP IRA, not quite as much money you can put away, but they're simpler to run. And so which is the best one? This is one you need to talk to your advisor. We've just got 2 listed here, but there are so many different kinds of plans. And the different amounts you can put away, whether they're self-directable, whether you get a deduction now and then you pay tax when it comes out, or something like a Roth where you don't get a deduction, but then it can build forever. So lots of benefits there with the retirement plan. Another thing that can trip people up, because it's almost like too many choices, so they do nothing, which I think is a mistake. If you've got a good plan for this, it can be a great way to save some money. And then we've got the next one, which is without a doubt the one I get the most questions on, and it's how do I write off my car? So the first thing you have to do is know how many business miles you've got and how many overall miles you've got. Now, for most people, you could figure out the overall miles because you took it in to get serviced, and the guy who did change the oil wrote down what your odometer reading was, and it's near the first of the year, and you've got one near the end of the year. You go, okay, I put 12,000 miles on my car this year. But now comes the question, how much of this is a write-off? How much of this was business miles? And it's funny because when I'm talking to somebody about this, a client, and they kind of look up at the ceiling, and you can tell they're trying to calculate, what's the best answer I can give Diane so I save the most amount of taxes, but it doesn't sound like I just made up the answer. And the fact is they probably just made up the answer. So here's a couple of tricks for this. By the way, up until a few years ago, we were telling people the same way to track mileage that we did 20 years ago, which was have a little notebook, keep it in your glove box, and then write down the odometer every time you use a business trip. Nobody does it. Well, some people do, but very few people do. But now that we have smartphones, we've got better solutions.
Yay!
So there is an app called MileBug, and it's written there on the slide, milebug.com. And it's not very expensive. You can just buy it. And what the cool thing is it makes use of the GPS that's inside your smartphone. And so you just basically click a button and say, okay, I'm starting now. And then when you're done, you click another button, and it's calculated your mileage for you because it's traveled along with you. I think that's the coolest thing ever. And then it keeps track of it, and at the end of the year, you have a list of how many business miles you did. Now, the maybe even lower tech, but still needs some kind of a camera or a smartphone, is simply to take a picture of your odometer when you start your business. My partner, she's got a smartphone, and she's gotten to the point where she takes pictures of everything. Takes a picture of the odometer when she starts, takes a picture at the end. She goes out to eat, she takes a picture of the receipt. If she's traveling, she just takes pictures of those receipts. Then she doesn't have to worry about keeping all these strips of paper. At the end of the trip, then she just loads up all these pictures onto Dropbox, or Evernote, I think, is the one she's using. It's got like a little folder on there. Free resources you can use to just track all of those receipts. Now, for mileage, though, what you've done is once you've figured out how many business miles you've got and how many total miles, you now get a choice. You can either take a cents per mile. For example, I didn't look it up today, but I think it's 55 cents per mile. Cents per mile you can take, or you can take a pro rata portion of all of the expenses. So that would be gas and repairs and tires and depreciation of the car. And if there's a lease payment, a portion of that, or if you're making a payment, a regular financing, then you've got interest. So you get either the choice of cents per mile or the pro rata portion. Where people sometimes get hung up is they'll take the cents per mile and then try to take gas as well. Or they try to add up some combination. And the fact is you get one or the other. The best answer, if you're asking yourself which is better, just do the math. Usually, though, if you put a lot of miles on your car, you're often better off doing the percentage. If you've got more percentage, if you've got a car that gets really good gas mileage, you're usually better off doing the cents per mile. If you've got a car that's cheap, you're better off doing cents per mile. If you've got a car that's more expensive, you might be better off doing the percentage. Those are just kind of ballpark answers. Now, another little trick on this one, if you're financing your car and you're making payments every month, there's a portion of that payment that's principal, it's paying down the note, and a portion of it that's interest. Only the interest that you're paying is going to be a deduction. So those are probably the three common mistakes that happen with cars. One is failing to take advantage of the mileage. I've given you a couple of resources that would be great to do in 2012 to get this off to the right start. Another is trying to mix up the cents per mile and expenses like gas. And then the third one is if you're doing the percentage, then you only get to take the interest or just the interest. You don't get the principal and the interest. And we covered a lot of stuff. I saw that the other slide just popped up there. So I have a feeling we got questions.
We have a ton of questions. I'm going to unmute our assistant here, Karen Locker. She says, I hope we have time because we have tons of questions. So y'all take a nice drink and get ready to answer questions.
Oh, boy, do we have questions. Let's see. I'm finding the end of those. All right. I'll start with the list I have, and then I'll add the other ones as they come up. Will all the refunds from PayPal show in this 1099 total on the outright total? So that's more a Laura question.
Yes, the answer to that is yes. We'll show all the refunds. Everything that's in the 1099K will show on the outright version as well, so that you can match that up.
Laura, I think I'd really like to clarify that when you say will the refunds show. I want to make sure people understand that what you're saying is if you sell something for $10 and you later refund that $10, the deduction of $10 is not going to show on the 1099, but the sale is. Is that correct?
Exactly.
Okay.
And so that's why for a lot of people who are getting this form for the first time, the number is going to look quite large and probably bigger than what you're expecting, because you sort of in your mind think, well, I never made that $10 because I had it was refunded. But in reality, that $10 sale will show up on the 1099K.
Right. I just want to make sure people understood that when she says the refunds will show up, she's meaning the sale will show up, and you're going to have to prove the refund. Thanks, Laura.
Exactly. And then you would just refund is an expense.
Okay, and we have another, the first couple are for Laura, and then we have a whole bunch for Diane. I have a question for outright. PayPal is reporting on gross, and outright is saying another. Which one should I go by?
So outright is basically showing you just your profit and loss statement. The 1099K feature, which we're launching on Monday, will actually you'll be able to use that to reconcile. Basically, the number that you want to use is whatever's on the 1099K. And everything else is then considered an expense. And so in Outright, if you're actually using Outright, your annual taxes tab will show you all of your expenses. So it'll show your income and your expenses. And you can actually print out a worksheet that allows you to look at your Schedule C totals, and then you can map those to the appropriate places. And so you sort of have it done for you. So that's the good news.
Okay, let's see. Like I said, I have lots of questions, and they're still coming in. Somebody was asking, will they get a 1099K from Pro Stores, which is the eBay standalone website?
I think that PayPal actually is the one that processes the payments for Pro Stores. I'm not 100% sure on that, but I believe that it is PayPal that's processing the transactions, and thus those will show up on PayPal. So basically, any charges that flow through PayPal is going to show up on the PayPal 1099K, and then any other transactions you have, like that aren't on PayPal, will show up on whatever credit card processor you're using. So Amazon Payments is another one. I think authorized.net is one. I think there's literally like 200 or 300 of them that are all small players that take credit card transactions, and they will all be required to send 1099Ks. That's why there's going to be 53 million of these things sent out, because there's so many different processors that are processing credit card transactions.
Okay. Thank you for that one. It's going to be fun to figure it out for this first year. Of course, my phone's ringing.
And even if you're not sure if you're getting one, this is a comment, you'll receive it by the first week of February. So you'll know by the first week of February whether or not you got one.
All right. Another question came in, and this is probably from Diane. It's about paying myself a salary if I'm an LLC that files a Schedule C.
Diane may have put herself on mute.
I'm sorry, was that for me? I wasn't listening.
Yeah, that was.
Yeah, sorry, I had to take it off of mute.
What about,
oh, jeez. Okay.
That's okay.
Repeat the question.
Kat and I do that all the time. What about paying myself a salary if I'm an LLC that files a Schedule C?
Yeah, if you're, as far as the IRS is concerned, however you file your return is what you are. So I love the LLC filing as a Schedule C because it gives you some asset protection. But as far as the IRS is concerned, you're still just a Schedule C. So you don't pay yourself a salary in that case.
Okay. Next question. Regarding the value of inventory, does that mean the purchase price of your inventory or the value you place on it to resell it?
The inventory would be, it's an interesting question because sometimes you get jumbled as far as what's the value of it today versus what it was when we bought it. But in this particular case, we're talking about cost. So if you bought something for, like you bought a bag of stuff for $100, and there's 10 different items in there, we've somehow got to apportion out that $100 to each of those items. And it would just be that, rather than the fact that each item is really worth $100 by themselves and you've got huge profit. So it's just what you paid for, it's just the cost.
Okay. I'm still adding questions to my list as I'm asking them. Okay, let's see. Usually during an 8-hour shopping for my inventory, I stop for a meal in some fast food places. I have all the receipts from these places. Can I deduct these meals?
That's a good question. It wouldn't be 100% deductible for sure, because you're not doing it at the employer's place of business. The problem you've got is that if you're in your own hometown going around doing that, you don't have a write-off. If you've, however, had to travel, you drove up to a city up the road, maybe a couple of hours up the road somewhere.
Welcome to GoToWebinar, Web Events Made Easy.
And I have a little bit of a rule of thumb, especially if you're working with your spouse. Any meal that you have that has a business deduction is technically a write-off. But the fact is, if you're working with your spouse, it's like every meal is a business discussion, and I don't write everything off. Pigs get fat, hogs get slaughtered, and I don't want the IRS slaughtering me.
Yeah, a friend of mine and I, we meet for lunch a lot, and I do some work with her as a trading assistant, and she's like, I could file this as a business write-off button. I'm like, we end up talking the whole time. Okay, next question is, can you deduct sales tax paid on your inventory?
If you paid the sales tax when you got it, that's part of your cost, yes. But that's interesting. They're paying sales tax when they buy something and then charging sales tax again. They probably could get an exemption and not pay that sales tax the first time.
Diane, we're dealing with a lot
That's
of...
what I answered her in the question. That I'm not sure of each state.
We're dealing with a lot of this now, Diane, with the new Amazon.
That's what I answered her in the question box.
Mm-hmm.
Yeah. Was that Laura?
I'm sorry, that was Kat.
They need to just apply for the seller.
We're dealing with a lot of this with the new Amazon sellers. They're doing a lot of retail arbitrage, and some stores are giving them trouble accepting their sales tax exemption. Some stores will take them. Some are giving them grief. So this is going to be a growing issue, I think, for folks. If I pay sales tax when I purchase, how do I handle the sales tax when I sell?
Yeah.
Well, and the other part of it, some people don't know that they can get a reseller's, if they're really new to it, a reseller's license so that they don't have to pay tax in the first place.
Right.
I think.
Yeah, well, it's a good point, and at any rate, it's a deduction, so we got that.
Okay, and here's another one. Can you deduct interest on your credit card you use to pay for inventory?
Good point. The answer is yes, but it's got the little asterisk next to it, because in order to prove that, you're going to have to show that the only balance kept on that credit card is business related. And this is where people can kind of have a problem, is they've got some personal, some business, they've commingled them, and then it just becomes a nightmare. It's like, well, I just paid off my personal, I didn't pay off my business. The IRS is not going to buy that. So I would say a qualified yes, and my preference is that you have a credit card you only use for business and another one you only use for personal, and don't mix them up.
Okay, and now this is about the office deductions. I have a dedicated room for my office. If I remodel it, can the remodeling labor and materials be deducted?
Great point. The answer is yes. Isn't that good?
That is good.
That's wonderful.
Okay, somebody bought a computer for $600. Is it an asset to be capitalized or a straight send to office expenses?
I'm guessing this is one that they're using themselves. It's not that they're in the business of selling computers, in which case it'd be inventory. Usually what we've got is, for our expenses, we take a look at, there's a certain dollar amount over which we capitalize. And it's interesting because the IRS kind of lets us set up what those numbers are, but they need to be reasonable. For my larger clients, what I do is if they buy something under $1,000, then we just write it off right away. We don't even worry about it. And then for smaller ones, I usually make the limit $500, and at $600, it's just barely over that $500. whatever rule you set up, just follow it. If you say, hey, we're going to write off anything that we buy under 1,000, then just always do that, and then you'll be okay. Personally, I would probably put it as an asset and depreciate it, just because it's above that $500 mark.
Okay. Would a drop shipping membership fee be deductible?
Yeah, it would be. It's part of the business, yes.
Okay. If you are a new entrepreneur and you reinvest all your income into the business, are you required to pay taxes?
Answer is yes. You will have to pay taxes on it. That's because when we look at this, it's income minus expenses gives you your profit. Now, if you turn around, well, it depends on what that investing, quote unquote, means. If the investing is expenses, like you're doing an ad campaign and you're marketing and those things, those are deductible. But if the investing means buying inventory, then it's not deductible.
Okay. So along with the drop shipping membership fee, any online e-commerce club fee, would that be deductible also?
Right. Yeah. Anything that's going along there again with the business. And I'm just making an assumption here that these are things that help you in your business. It's not just something, yeah.
Is there a rule of thumb of how much % I can take as a salary?
And now we're assuming that you're not a Schedule C, and so that you've got some other kind of business, like I'll just pick on something, say an S corporation, because that would be the entity that would need to have a salary. Our rule of thumb is that, assuming that you've got a company that's profitable, and this is kind of a question I deal with some of my larger clients on a regular basis, that we look at, they have to take a salary that's reasonable to what they're making, or 50% of what the net income is, whichever is less. I'm not sure how applicable that's going to be for most eBay sellers, just FYI.
Okay. Can I open an individual 401k or SEP IRA by working as a sole proprietor, or do I need to be an LLC or a corporation?
Yes, you can open those with a sole proprietorship. But you need to get with somebody who does that, a pension plan, and they'll walk through all the details on what you need to do.
Okay. Do you have to open a retirement account by year-end 2011, even though funding can be up to the file date?
This is one of my favorite answers. It depends. With some of the plans, you don't need to have them set up by year-end. Some of the plans you do. So I would, rather than go through the long list, I would tell them just go talk to your pension person.
Okay. Okay. This person buys used motorcycle parts by the boxful. Some of it's junk and some of it's sellable. How do I show what each part is worth so I can show inventory and profit?
Oh, that's such a good question, because it becomes a little bit of a bookkeeping nightmare. When you're buying by the lot, and some of it's junk, so we just throw that out, and you end up with maybe 50 usable parts, and you paid $50 for it. Maybe you just say, okay, each one of them is worth $1, or there's one thing that's clearly worth a lot more. Then you somehow have to attribute that total amount you paid for the lot more for that. So something else is worth 50 cents, and that's worth $1.50.
Okay. Can auto insurance be part of what you consider for car expenses?
Yes, and that would be, again, if we're using that percentage. If you're using mileage, you don't take auto insurance as a deduction.
Okay. If you stated a loss after deductions for 3+ years, does it change the status of your business to a hobby?
Ah, good question. And what this brings up is that the IRS, if they continually see a business having loss year after year, they might question whether you really are in business. Do you have a true profit motive? Now, there is a particular revenue procedure where it says that if you have income for a certain number of years, it's that 2 out of 5 years, that part of it, then yeah, you get the pass on the profit. But what if you have year after year of losses? Does that mean you're necessarily out of luck? And the answer is no. I mean, we can just look at some of companies like Amazon, who ran losses year after year, and nobody tried to claim they were a hobby. But what you might have to do is truly show that you're trying to get better with your business, that you're running it in a business-like fashion. You've got you attend webinars like this one to learn how to be better at your business. If you're showing that you're doing that, you've gone a long way to proving to the IRS, I might be running losses year after year, but I am trying.
Okay, good question. I know somebody I was working with was trying to get a lot of inventory out before the end of the year, so she wasn't showing all losses because she's on like year 3. Okay, another question is, the person has an LLC. Should they have done a sole proprietor instead?
They have an LLC, and that's just, okay, I'm not quite sure on that question. They formed a limited liability company, and then if they haven't elected, it's just one owner, and they haven't elected how they want to be taxed, because an LLC can elect how they want to be taxed. And if they haven't, then it just defaults to the sole proprietorship. And just a note here, as you get bigger, I don't like the sole proprietorship. I'm just talking about it because that's how most people start. But with most of my clients, I try to move them out of that for a couple of reasons. As soon as you got profit, you're going to pay more taxes. And then the biggest one is, if you don't have that LLC protecting you, if something happens with that business, you can lose everything you've got. But the fact is that it's easier for most people getting started to do a sole proprietorship.
Okay. This is a question back when we were talking about the refunds showing up. What do you mean that I have to prove the refund? And I think that's basically, it'll show through PayPal that you refunded the money. Wouldn't that be how you do it, Laura?
Yes, that's correct. You would just see it in PayPal. You could also see it in Outright.
You'll just have to keep track.
Another question for Outright.
You'll have to keep track and add those up and enter those on your Schedule C yourself. That's where you put those.
Exactly.
That's correct. If you're using Outright, it'll be one number that you can see push in there.
Cool. Another question is, this is for you, Laura, can I go back into Outright and add expenses from last year?
Yes, you can. And if you're just signing up now, you can get the full year of PayPal data in there as well. You'd get it from January 1st, 2011 and on.
Okay. This is a seller who's new to eBay, and she's collecting state tax. What about local taxes? Do I have to collect those as well? Where do I pay the taxes, and to whom? The state she can figure out, but local with many different locals, do I have to collect them? How do I report them?
Wow. You know, that's a question that varies based on where you are. I'm thinking like New York City, it's like, wow, because there's lots of different areas that you might have to collect. It's hard to give a good answer here because it could be pretty general. I'm going to give the cop-out answer and say you might need to talk to somebody in your area about what's going on there.
Well, and every state's different.
Yeah. And every city is
different. Exactly. That's why, even though I live in Massachusetts, it's a flat 625. So
yeah.
I like that. Okay. The next question is, when do we get the 1099K? And you said that was by February 1st, Laura?
Yeah. So PayPal starts sending them on the 23rd of this month, but a very small number, and the vast majority are being sent on the 31st. And so it would arrive however long it takes the USPS to get it out to you, probably within a week.
That's a lot of pieces of mail for them to move. Wow.
Yeah. It's quite, I think the post office is used to it because it's forms, but it is a lot, and it's a strain on PayPal as well to have to create all these forms. But they're doing a great job of it. They're really, really working hard on it.
All right. The next question is Google Checkout sending 1099Ks?
I'm not sure if Google Checkout is a payment processor, but if they are, then yes, they would be.
They are, Laura?
Yeah, they are.
Yeah,
yep,
and they would be. Again, they're not talking to each other, so if you would have to equal 20,000 or more from Google Checkout plus 200 items or more from Google Checkout in order to get one.
Yep. Okay, sometimes I sell my old stuff what I don't have, and I don't have the receipts. Could I show the cost of this item as a fair market value price I sold this item? It means I don't have a profit. And should I include the price in the purchase and cost of goods sold? I think I got that all out there.
Okay, can you do that one more time?
Yeah, so basically I've got something here at the house and I'm going to sell it. And I don't have the receipt, so I don't know what I paid for it. How do I show the price, and is that, you know, do you not have a profit if you've sold it, and do I include all that in cost of goods sold? Did I make it even worse?
Yeah, well, no, actually, I kind of get that. So there's a couple things that could be going on there. One is that you've got items that you personally bought and you contributed to the business when you started. If that's the case, then you figure out what the fair market value is at the date you contribute them. And then that then sets the inventory value for those. Now, if you're going around hitting garage sales and nobody gives you a receipt and you don't know how much you paid for items, that's a problem. And the issue would be if the IRS ever audited you, you need to show proof of how much that cost you to buy, or they might not give you the deduction for it. So this is one of those, if you can get any way of, I mean, take a smartphone picture of the little tag on it when you bought it or something, some kind of proof of what the value of that was, the cost of that was.
Okay. Someone else here just opened a brick-and-mortar eBay consignment store and have been going to school getting the associate's degree in business management. Since I was in school before I opened for business, am I still able to deduct the tuition going forward?
Again, it would be if you've started a business and if there's classes you're taking that relate to the business, those classes would be deductible. So if you're taking a class on pricing models or, you know, inventory or, you know, something like that that helps you specifically, yeah, it's probably deduction. If you're taking a class in college algebra because you need it to get the degree, probably not.
Okay. In 2010, I was a sole proprietor for my LLC, and in 2011, I added 2 more partners. Do I have to get a new tax ID for that?
Yeah, you've actually, well, let me back up. The LLC itself has to change, and you have to change the paperwork that goes along with that and probably refile with the state. You can use the same employer ID number, but you need to make sure that you've made the changes you need to with the state to show the additional members in the LLC.
Okay. Next question, and I think it's more for Laura. How can I break down my monthly PayPal income on outright form when PayPal only allows access for the last 3 months?
So no, actually PayPal allows access through January of 2011. So we actually can get the full year's worth of data from there, even if you're signing up now. eBay does not allow more than 3 months. And so any eBay data you wouldn't have. But since everything from eBay runs through PayPal, you're going to catch all of the transactions. You just won't have like all the detail of like it was specifically this item that sold. Like you wouldn't know that because you don't have the full eBay data. But you will exactly know how much money was coming in and out because of PayPal. And PayPal does provide that information, which is fantastic.
Okay, Karen. It's 3 o'clock.
Yeah.
Why don't you pick one? Why don't you pick one? Karen, why don't you pick one last question, and then we'll move over to the Facebook group, and if any of our presenters can come with us for 15 minutes, that'd be great, but we need to be respectful of their time. We've kept them for an hour. Why don't you choose one last question, and then we'll move over to the Facebook chat.
All right, let's see if I can find, there's like tons.
Kat, I love your bell, by the way. That's awesome.
You know what that bell is on my podcast, Diane? That's called the It Depends bell, because I say I say it depends so often. They called me the Depends lady, so I had to get a bell.
All right, here is a really longish one, but I'll get to it. And then I'm going to be very close with one of the rest of the questions, Kat, so maybe we can get them answered at another point in time. Okay. Now I got to find the question again. Hold on. Okay. If a person decides to spring clean a bunch of items accumulated in their house over, say, 20 years, and it sells for $30,000 from January through April, they were all personal items with no receipts for proof. Right. Then decides they like selling on eBay and goes into a small business from May through December.
Right.
With
so
an EIN number.
Yeah. So the items that they have that they contribute in are that we establish the fair market value for those items, and that would just be based on whatever it is the value that it's contributed at. Now, if they're immediately sold, then probably no income at all because the fair market value that it was contributed at is probably what it sold at. If you contribute it and it takes 6 months to sell, there could be a little difference there in the price. But that's how the accounting on that works.
Awesome. You know, Karen, if you're telling me there's some great questions, why don't you copy all the questions to a Word document, and we will do our best to get some time and some answers from our presenters later when they have more time, because I know they're busy.
Yeah, that's what I've been doing all along is I've been copying all the questions, which is why you kept losing me, because I'd be copying as I was asking them.
Okay, so if your question
Okay.
if your question did not get answered out loud, please join us in Facebook chat. We'll do what we can over there, and if we can't answer it there, we'll send an email and we'll post a blog post with the answers after we get them. We really appreciate all of you showing up. Yes, Karen? Karen?
Well, I just had a question that was for Chris, if he's still here. Chris, are you still here?
I don't see him here.
All right, so I won't ask him then. I'll get the answer for that person later.
Okay. We really appreciate
Okay, go
everyone.
ahead.
We really appreciate everyone being here. And if this is the first time that you've met Diane Kennedy, she's been all over the web. But if you've never met her before, I think you'd be very lucky to follow her and sign up at her website, ustaxaid.com, for her wonderful newsletter. I've been getting it for several years. It's always worth reading. Ryan and Laura, of course, are at Outright and eager to help you with any issues you have with their software or with their accounting programs. You can contact them, Laura M. at Outright.com or Ryan at Outright.com. Please remember to say a special thank you to our sponsors. These webinars obviously are not free to put on, but they are free to our attendees because of our wonderful sponsors, eBay Radio, Billboards by PageMage, Stamps.com, Outright, and Terapeak. We appreciate them and we thank them. Don't forget, our next webinar is scheduled for February 22nd, 2012 at the same time, 11 a.m. Pacific time. You can find out all about the new eBay Seller webinars by signing up for our newsletter at topratedsellerwebinars.com. We will see you. Let me go back. I'm going to post a link to our Facebook group so that you guys can find us over there. And I'll show you my ugly screen while I look for that. This is a link to the Facebook group. If you can't find us, you can just go over to Facebook and search for Top Rated Seller Webinars. But I will post the link into the chat room so you can find us there, and we'll open chat in about 2 minutes. Really appreciate all of you here. Diane, any last words you want to say to our audience?
I just want to say thank you for the opportunity, Kat. It's very interesting to talk about all the things going on and the changes, and hey, hang on, when it comes to taxes, I think it's going to be a bumpy ride.
Oh, I think you're absolutely right about that. Laura, do you have any last words for our audience?
Oh, just thank you to everyone for attending, and please do come over to Facebook. We'll be over there answering additional questions.